Hi, I'm Ed Sakota. In response to numerous requests over the years to reveal the inner workings of my trend trading system, I hereby take great pleasure in presenting its essential elements for your financial edification. Joining me today are several members from the Northern Nevada Bluegrass Association. We gather to play benefits for local area hospitals. If you are currently in a clinic as a recovering marketaholic, or even if you have a mild case of marketitis, this tune might put you on the road to recovery. In any event, pull up a chair, lean into your monitor, and lend us an ear. We hope that you enjoy the show. You get a whipping, I get a saw, honey. You get a whipping, I get a saw, baby. You get a whipping, I get a saw. One good trend pays for 'em all, honey trader, baby mine. Now what do we do when we catch a trend, honey? What do we do when we catch a trend, baby? Well, what do we do when we catch a trend? We ride that trend right to the end, honey trader, baby mine. So you get a whipping, I get a saw, honey. You get a whipping, I get a saw, baby. You get a whipping, I get a saw. One good trend pays for 'em all, honey trader, baby mine.
Well, what do we do when we show a loss, honey? What do we do when we show a loss, babe? What do we do when we show a loss? We give that daggone loss a toss, honey, baby mine.
Well, you get a whipping, I get a saw, honey. You get a whipping, I get a saw, baby. You get a whipping, I get a saw. One good trend pays for 'em all, honey trader, baby mine.
We make a lot of money and we sleep at night, honey, baby mine. So
you get a whipping, I'll get a saw, honey. You get a whipping, I'll get a saw, baby. You get a whipping, I'll get a saw. One good trend pays for 'em all, honey trader, baby mine.
Well, what do we do when the price breaks through, honey? What do we do when the price breaks through, baby? What do we do when the price breaks through? Our sauce or Renzo's nothing to do, honey, baby mine.
So you get a whipping, I'll get a saw, honey. You get a whipping, I'll get a saw, baby. You get a whipping, I'll get a saw. One good trend pays for 'em all, honey trader, baby mine.
What do you do when the drawdown comes, honey? What do you do when it gets real big, babe? What do you do when it's even bigger? We stick to the plan and pull the trigger, honey trader, baby mine.
Well, you get a whipping, I get a saw, honey. You get a whipping, I get a saw, baby. You get a whipping, I get a saw. One good trend pays for 'em all, honey trader, baby mine. What do we do with a hot news flash, honey? What do we do with a hot news flash, babe? What do we do with a hot news flash? We stash that flash right in the trash, honey trader, baby mine. So you get a whip and I'll get us all, honey. You get a whip and I'll get us all, baby. You get a whip and I'll get us all. One good trend pays for them all, honey trader, baby mine. Good trend pays for them all, honey trader, baby mine.
Howdy folks, we start in a couple of seconds. Hello everyone, welcome to the stream. I hope you enjoyed the double bass from Ed Sokota's live bluegrass band playing the trading song, the Whipsaw song. Some very good news for traders coming up shortly, so stay tuned. And welcome to the stream, everyone. It's Labor Day weekend, so don't expect many people will be here, but I wanted to fill you in with a few things, and you may have also noticed my absence last week, so I'll talk about that too. But whilst we're here, let's talk about the sound and tell me if you can hear me. And if you can hear me, just please give a thumbs up in the chat. And once I've got that confirmation, thank you, Cleopas. I think that's a confirmation that you can hear me. I'm just going to go to the back side. It all looks good on my end, and I'm using software, different software again. Thank you. Wonderful. Thank you, Martin. And Jamie. Jamie, I haven't seen you around before. It's great to have you here too. Excited hot air balloons says great. Emil, welcome to you, and Martin, and Cleopas. And right at the top, I'm not going to miss you out, I think. I think it was just Martin. Anyway, welcome to everyone. Welcome to the stream. And we're just going to go through a couple of things. It's not going to be too long. And if you got anything from the stream, the good thing will be the Whipsaw song at the beginning. So if you're watching the stream and rewinding it, if you missed the Whipsaw song, go back, rewind it, and watch that song by Ed Sokoda, one of the famous traders in one of those books by Jack Schwager called The Market Wizards, Stock Market Wizards. And that's one of the traders in the book and in the Bluegrass Band too. Some excellent advice in the song. So welcome to everyone. And I'm going to go through a couple of things. I know I'm a little early, but it is Labor Day weekend after all. And it's Sunday night, and I'd like to go and do some other things. And I've also got my crypto portfolio to look after tonight. So I've just had a nap. I've had some late nights, and I've woken up quite foggy, as one does after a nap. So if I seem a bit clouded, that's the reason for that. So let me update you with the news first before we go into these charts very quickly. I'm going to focus on crypto and natural gas energies and perhaps metals today very briefly. But let me just tell you why I haven't been around for this last week. I've taken some time to think about my life and what's going on with me at this age. And being almost 60 years old, it's time for me to slow down a wee bit, I think. So I've taken up some extra consulting work with Ola Prime, and I will continue at ArcisFX, of course. But I'm going to be stepping back personally a little bit, and there will be others stepping in to provide great trading content for you on this channel. Including someone starting in about 3 or 4 days' time, dealing with the crypto market. So I'm pretty excited about that. Excuse me for a second, whilst I clear my throat. So I'm really looking forward to that. So, and there will be other contributors and some other content and some live trading too. So we're going to be doing some live day trading here on the channel. But you will see a little bit less of me, but don't panic. I will be around. And I will be in my private group every day, as I always am, taking my trades. So if you're missing out on my trades and you'd like to know what I'm doing, and you're missing some of the videos here on YouTube, you can get me on X. I post every day on X several times a day, trading ideas. And you can also get me in my private group. I'm there all day long. And if you would like to see the trades I'm taking on a more regular basis, those are two options for you. One is free and one is not free, but not very expensive. So go and check those out. There are links below. So that's the news, folks. So we're getting a crypto trader. We're going to be doing some day trading and some podcasts and some really exciting and useful content for you. It's great doing what we've been doing so far with market analysis, as you've been watching my videos. But I kind of feel that I could do a little bit better. I think I could provide better insight, better practical trading tools and tips for traders. I think we could do a lot better in helping traders become profitable in this market. And I'm not too sure that the current content format does exactly that. So that's what we're looking at, folks. I'll continue to trade as usual, of course, in my private group, and my members there are well looked after. Just slightly fewer videos from me on YouTube, but we will have some other contributors, including the crypto man, starting next week. All right, having said all of that, and I'm pretty excited about everything, folks. The other place you can actually get me, and it's also free, by the way, is at Olive Prime TV. And that's on YouTube here. And we have a 5-day, 20-hour streaming platform there, day trading the markets, analyzing the markets, and looking for trade setups. So I'll be doing that Olive Prime a little bit more. I've been doing it for an hour a day already, but I'll be doing a little bit of day trading for them in the Forex session. So check out Forex Fire on Olive Prime TV and see if you can find me there. I'm on there every day, starting tomorrow, actually. Even though it's Labor Day, the Forex markets are open, and I'll be on live at Olive Prime TV tomorrow morning, doing some scalping, day trading, and some swing trading across all of the markets. So you can catch me there tomorrow morning, Olive Prime TV, at the Forex Fire session. Go and look that up. All right, that's all out of the way. Let's go to the charts. And it's crypto season, and so we need to talk about crypto. Now, on this page, I've got a variety of cryptos. Normally what you see is this other page, which has Bitcoin, Ethereum, XRP, and some of the metals, gold, silver, and copper. But I've got a new set of charts here for you just to show some of the names that I'm in on the altcoins and the major coins too. So having said all that, let's quickly look at Bitcoin. And I put a post up this morning on X showing this idea, and I think it's pretty accurate. I think we'll try and hold this level where we are currently. I'm allowing for a further dip down to 100 on Bitcoin and maybe slightly below 100, down to the 200-day moving average right down below here, this purple line. Yeah, so I'm just reading Martin's note here. Time for the retirement plan. Yeah, I suppose. I've been doing this a long time, and 30 years in the markets is pretty tough on the psyche and the endurance levels. But anyway, there we go. So I've got a target up here. Basically, it's a very, very simple target. If you take this bull flag, it's no longer a bull flag because we broke down through the bottom. It's now become what looks more like a megaphone pattern. This is not accurately drawn in. We could do this a little bit better too. But let me just try and show you more or less what I think we're heading towards. And that's a new rally out of this low. I think we'll hold this low just around about 108. Remember that if we do close below this current low, and that's at 107,311, if we close below there, we'll probably head down to the 200-day moving average, and that's at 101,200, and possibly poke through there down to the bottom of this big, strong line below us. Let's quickly reset the scale. This is the long-term trend line. And if I change this to a logarithmic scale, I am stumbling over my words a wee bit today. So I've changed it to a log scale, and you can see we're trading on that line most beautifully. And I made a statement a while back, actually, on X, that I don't think we're going to break this line anytime soon. My feeling is that the crypto cycles are no longer what they used to be. I've never really been a cycle advocate in any case. And looking at this chart, although you may be able to fit some cycles in there, and the Bitcoin bros and ladies will be pulling their hair out as I say this, because they do believe that there are cycles and they're very clearly defined. There are 4-year cycles, there are 6-month cycles, there are a certain number of days. I think it's 80 or 70, whatever it is. 60 days, I don't know. But there are cycles in here, according to the cycle traders. Fine, let them go with that. That's no problem. If it's worked for them, that's good. I don't really believe in that too much, but even if we did have cycles, which looks like to the left-hand side we may have, on the right-hand side, since the sort of adoption of crypto by big corporates and governments and so on, and crypto treasury companies, we've now got a trend line and not this massive cycle altcoin type pattern that we'd seen before. So I think we're trading along a trend line now. I'd be very surprised if this trend line breaks anytime soon. And we're actually quite close to it if we look at the logarithmic scale. There's the bottom of the falling wedge, and there's that rising long-term trend line. That goes all the way back to 2022, all the way down to December 22 at the beginning of this run. So a long, long trend line, a couple of years long, and eventually it will break, I suppose, but I don't think anytime soon. So that means we should try and hold here, excuse me, and bounce out of here, allowing for a dribble down into that apex. That's down at about 106. It's another number that people are watching. It's also one of the highly traded zones here, as you can see on the left-hand side. Folks, if you just please confirm that you can hear me well still. I'm getting a little bit of a panic attack just in case I'm speaking to a blank screen. So if you can hear me, just let me know. Please type up something in the chat saying, I can hear you, James. And once you've done that, I'll continue with Bitcoin. I also want to talk about natural gas and oil and gold, particularly today. So we'll get onto those too. Okay, fantastic. Thank you, Jamie. Right. I've still got a frog in my throat with a bit of flu. I believe a lot of people are getting flu at the moment with the change of season. And Larry says, excellent sound. Thank you. Thank you, Larry. And good day, Emil and Jamie. Nice to see you. So let's go back to Bitcoin. And I do think that we'll hold here, but I'm allowing for that move down to 106 and at an extreme and at a stretch, maybe down to this trend line. It's not much further below us, 105, 106. And it may also just be that we've got to take that trend line out and break my prediction on X. I don't know. But if we do get down to 100, we'll obviously have to take that trend line out, which would be a bit of a problem. So we don't want that to happen. And I think we might try and hold here. And we are trading above the most highly traded zone. Let's make sure of that. So we're sort of above the main volume. The next node of volume is right up here, back up at 118 again. I think we'll get there fairly soon. Now, what I've done as well is I've got a weekly chart. I want to show you this. This is super interesting. And I'm zooming into the weekly chart here on Bitcoin. And I'm going to show you my hypothesis. Now, look what happened last time. We had a similar pattern. We moved up from this low on the left-hand side up to a high, in this case, a double top. It's a little bit different now, but up to that high, and then we moved down and made a swing low, and we've moved up. I've used that move for my Fibonacci projections, but I've also used it to draw a fractal. And what I'm going to do is show you this move from the takeoff point up to the top. Just those 3-4 week candles. And I'm going to stick them onto where we are at the moment, sticking onto that low where the 20-week moving average is, the bottom of the megaphone, and it's also the 61.8% retracement on this weekly chart. It's a very, very powerful level. And if we bounce out of there, following the bull flag hypothesis and following this fractal that we're measuring currently, we should get a target which matches up with what I've had all along, all the way up here at about 136. I'm going to change this to the type of candle. Let's just double click on there. From high low to open and close, like that. And that gives you the high over there at about 130, actually 139. But, excuse me, sorry again for the coughing. But considering that's the top of the megaphone, it's also the bull flag projection. And it's also the full Fibonacci extension of this move that we're talking about, the measurement of that move, all at about 136. So maybe we'll poke up through the top like this seems to indicate, but I'm not too sure about that. Doesn't really matter. The target is 136. There are stumbling blocks along the way that we've got to get through, all these Fibonacci extensions. But I think this is the most realistic scenario. And if that does occur, we'll be at 136 in 4 weeks' time, which would take us to the middle of September. And that might just be the beginning of the alt season run once we get up into new all-time highs. And we see the Bitcoin, Ethereum's on a blinder, Solana's on a run, but the altcoins are still struggling, most of them in any case. I've got them all behind me on the screen, and I've also got them all here. I'm going to run through this with you very quickly. This is just a small $23,000 account here at Luno, and I'm going to show you the names, my altcoin picks on here very shortly. So that's where we are on Bitcoin. Going back to the day chart, I think that we've got a good chance of bouncing out of here. And if we zoom into what the price action's currently doing, not great, actually, somewhat supportive, perhaps, but no great shakes. Let's go zoom in to the 4-hour chart. Again, very, very pathetic. A little bit of a double bottom bounce off that level that we looked at. That's the megaphone bottom. But since then, no momentum whatsoever. It's the last day of the month today. And in 8, 9, 10, 11, 12. In 5 or 6 hours' time, this market will close. Let's go back to the day chart. And what we would like to see, actually more like the week chart, what we would like to see is actually not what we have on our screens right now. We've still got 5 or 6 hours to fix this, of course. And what I prefer is this weekly candle not to close in the black. I'd like that to close at least neutral or green and negate the 3-week falling down pattern, which often leads to further decreases or further declines. I'm not too sure if this theory is correct. I saw it somewhere. It's probably not correct. It's probably just nonsense. I saw it on YouTube, so probably it is nonsense. And that brings me to, don't pay too much attention to what I'm saying. This is what I'm doing. Do what you like doing. Don't do what I like doing. But anyway, this chap spoke about the 3-bar falling pattern on Bitcoin leading to further declines. Now, I don't know if that's true or not. Probably not, but maybe it is. In any event, I'd rather have this week closing green than black or red if you use colored candles. But we've got 6 hours to get that back into the black. Let's go back to the day chart, and you can see where we are struggling. But today's candle is still a higher high and a higher low. And with a bit of a shove, let's go back to the weekly chart. How far do we have to get a neutral or a green candle? We've got to get to the point of control, or this, not the point of control, the previous all-time high and this yellow line in the center of the screen and slightly higher. That means we've got to get to 112,200. Back to the day chart. And how far above that is that? How far above us is that? There's the yellow line. And that's also where the 100-day moving average is. There's the 20 and the 50 above us. A couple of things I want to talk about this, and I'm going to mainly focus on crypto today because we are entering what I believe is the next bull run. And these are places where you can make some money as a trader. And my job is to help you to make more money as a trader and not just to waffle on about hot air. I take this very, very seriously. I'm a trader. I make my money from trading. I don't make my money from making these videos. I make no money from these videos at all. Maybe a few pennies which go to pay for my paywalls. So just do your thing. I'm doing my thing. That's what I'm trying to say. So I think we'll bounce out of here. We've got 6 hours to get above 112-ish. Doable, sure. We're at 109 now, $3,000 up in 5 hours. That's $500 an hour, no problem. That's the 100-day moving average, and there's the 50 and the 20 curling down above us. It's not great when the 20 crosses below the 50 and curls down like we're doing right now. The big red line in the center is the 50. While we're talking about the 50-period moving average, once these moves get going, we're below the 50 on Bitcoin. Let's have a look at where we are compared to the 50-period on all the others. We're well above it on Ethereum. We're just below it on XRP. So Ethereum is very strong. We're well above it on BNB. That's the coin for not Binance, the other crypto. No, I'll think of it just now. The big crypto firm. Then we've got ADA, Cardano above, on the 50-day moving average. Then we've got Solana well above the 50, Sui below, and LTC Litecoin just below. So really, these a bit of a mixed bag. Some of the alts have got going. Bitcoin has not got going, but Ethereum and Solana are on a bit of a run. So how are we going to play this? Well, it's very, very simple. I'm going to show you my bag shortly, show you what I've got in. It's a small-ish account. Well, I mean, it's $23,000. Not sure if you can see it, but I'll read it out to you shortly. But I've got that split between about 12 different coins. I'm going to tell you what my split is. That split will change over time as the season moves along and the coins start to vary and jostle against each other for ascendancy in this altcoin race at the end of the sort of season as we move in towards the end of the year. So yeah, that's it really. It's all about crypto and Bitcoin right now, and it's a chance to make some money on some of the altcoins. Before I go into that, I'm going to switch across quickly and have a look at some of the metals just to indicate to you. Hi, Omkar and Ben and Kogi. I'll read out through the names shortly. Let me just finish off my monologue. So as you know, we're long on all the metals, including gold, silver, copper, lithium, uranium, not plutonium. I don't know if you can trade plutonium. You might be able to. Some of these metals are also energies, not only metals, but energies too. And let's have a look. Now, gold is doing pretty well. We're not out of the woods yet, though. We've got this big rising ascending triangle, and we're through the top, but not for the first time. We've been through the top before twice. So that might not be the top. Actually, I might need to move the top higher just to be a little bit safer. So let's at least move it to that high over there and make this a little bit more conservative. And we'll actually say we haven't broken out just yet, but we're about to. So that's gold. We didn't get paths B or C. Remember, I put a poll up on X about B, C, and A, the two meltdown paths, either to 3120 or 3000, the big round, and the 200-day moving average. We'll have to get to the 200-day at some point, not now. Right now, the 200 is catching up with us. That's this purple line here. So we didn't get B or C, and we still haven't got A. So we're still in the middle of all of this mess. And gold has been trading sideways across the page since the 17th of April, 21st. Right, but this does look great, and it's constructive, and we're long from the point of control, literally, right on the point of control, and that is from, let's call it 3330, and we're currently trading at 3450, so we're $120 up on that gold trade. At the same time, target, by the way, is $3,800, and probably more. But let's go with that for now. And then on silver, we're also long. We have a very good position on silver. We've been long all the way since about actually down in the 20s. We've not gone short on silver for a long, long time. And our last, our first entry on this run was all the way down here at $31. We're currently trading at 39. And I think silver could get to 50 and maybe more, along with gold. And then the other one that we have on is copper. And well, we got into this trade at the bottom of this move down on the 31st of July, the last day of July. We're now the last day of August. So 1 month later, we're still where we were. Quite sort of about the slowest trade that you could ever get into, maybe. So there we are. We are peaking up a little bit now. There's the 200-day moving average and a big fat order block straight above us. And that's the first obstacle. We've got to get through there. And if we can get through the 200 and hold above there, hold above roughly $4.65, then I think we could get higher. Once again, there's the 50-day moving average. This is all very messy, and a lot of people misread this chart. That big move up was because of tariff fears, and when those tariff fears were removed, we simply came back down to the trend line. Nothing weird about copper, apart from the tariff situation, which affected many things. There was the last big run on copper. I don't think this was a run up. I think that was a tariff blip. We've come back down, and we've just come back down to the trend line. Allow for a dip down to the next trend line, the green one down here, or even this flat line at the point of control down here at about 370, 380, maybe down to the trend line and this order block at about $4. We're currently trading at 450. I'm hoping we'll hold the red trend line. I kind of like the way it looks. We've come down a lot, and at least a little bit of a bounce out of here in protest would be acceptable on copper. So a protest bounce. I think copper's probably got a lot more in it. It's in demand. Electricity is in demand. building and cars are in demand, AI is in demand, and they all use copper. Right, so talking about energy and demand for energy, we are going to talk about natural gas, the widow maker. Now, I hope you survived this, everyone. I hope you did okay. We had a very, very tricky start to, well, end to the previous contract and start to this current contract. We got stuck at the bottom here in between contracts, which you never really want, because the whipsaw occurred at the contract rollover, creating all sorts of whippiness and wappiness around here. Sunday night, silly talk from Jampar James. Right, so messiness and stuff down here. We had to get hedged once down there. Actually, I think we got hedged twice on this move. Anyway, we got out of all of that quite comfortably. We traded the futures and the continuous through this mess, made a few pennies, lost a few pennies, came out slightly positive overall, and slightly exhausted by the whole thing. But we did manage to get in before the start of this last rally. This was all posted on X and in my private group, and I think here on YouTube actually in the last video. I'm not sure, or at least my intention was we didn't have any videos during this last week, so maybe you didn't get to see it. But it was on X and it was in my private group, and we've moved up from where I got in at 277, and we actually got out, not out, but hedged that entire position at the close of play on Friday. So we got in at 277, and I hedged the entire trade at $3 on the dot. So we have 23 cents locked in there, profit. And I don't know what's going to happen at the rollover. Now, there's a couple of things you need to pay attention to here. First of all, we're at the 200 period moving average here on the 4-hour chart. It's a big resistance level. Also, you can see very vaguely, I don't know if you can, there's a faint dotted line that we're just underneath at the moment at the 200-day moving average. There's a very faint dotted line running down like that. And that dotted line is the center of this large potential bull flag pattern that we're busy trading out of. So we're at the center line. We're at the 200 period moving average here on this 4-hour chart, and we've had a big move up. We're probably overbought on the stochastic and on the RSI too. I don't have those on my chart, but I'm sure we are. So yeah, that's where we are. And then going back to the day chart on the same instrument, there's natural gas on the day chart. You can see why I think this is a big bull flag, but it might not be. We do read patterns into things where there are no patterns, but it looks okay to me. And we're trading within the skinny. We were trading within the skinny channel, the one that you can see running down the center here. We were trading within that all the way down towards the bottom of this big bull flag. We didn't get to the bottom of the flag, which is good news for bulls. We turned around before we got there. I thought we might have to get there, and that would be at $2.20. We haven't got there. And we bounced from here, which is a big level. Now, on the day chart, we've broken up through the 20-day moving average. That's the first thing that we needed to do, and that's a great sign of positive bullishness. Last time we got through here was on the 18th of July. It's the green line I'm talking about. 18th of July, we only lasted above it for 3 days and gapped down below it. And prior to that was all this messy stuff during May and June. We are now above the 20-day moving average. Very, very good news. And we're approaching an order block, the 320 level, the next sort of obstacle, and the 50-day moving average right here, the red line. And there's a couple of obstacles up there. My target actually is 375, which is more or less the top of the channel and a bit above. And then beyond that, up to about $4. And I think we could even get to $5 on this run, depending on demand, and perhaps aided by a little environmental assistance in the form of hurricanes or inclement weather, hot or cold, depending on the season that we're moving into. So that's where we are. Long 277, hedged at $3, 23 cents profit locked in. No matter what happens, that's not going away unless we unhedge and get into some trouble later on. But that's okay so far. And at the same time, I want to point out to you that we were long on natural gas on the continuous contract here at Pepperstone. We're out of that trade now, having taken profit on that long. So we now only have the futures trade on from 277, hedged at $3 round. A couple of other things on this energies page, and I think we're going to finish off with this. Now, we've talked about gold, we've talked about crypto, we've talked about all the metals, we're talking about energy now. This is WTI oil. I'm still long on this, but I'm hoping to get short next week. I hope that we can get up into this blob, the 200-day moving average, the purple line up here, and then reverse. But it looks like we're already failing. And if we zoom into this day chart, you can see 4 days ago, we had that big bearish engulfing candle, and that's now dominating this entire pattern. If I zoom into the 4-hour chart on the same thing, you can see that big move down there. That's the big domineering daily candle or weekly candle that you can see dominating this pattern. So really, unless we get above there and this 200-day moving average on the 4-hour, it looks like we're just going to turn around and start moving down. I'll probably take profit on the long trade that we've got right from the bottom here at the open tonight, maybe even, I don't know. We'll see how it looks. And then maybe look to get short at the same time. So we could just reverse direction the next trade we take. We're long, we could take profit and immediately sell. It's called stop and reverse, SAR. Used to be a thing in the old days when I started trading. SAR. You can still get an SAR indicator, actually, which can help you on your charts here at TradingView. And then the other trade that we got on is XLE. I'm pretty bullish on energies, including oil and maybe oil. I don't know. Oil's the only one that I'm not really positive about, but all the other stuff for sure. And that includes natural gas, lithium, uranium, all the variants of the various volatile fuels and so on, including paraffin, petroleum, whatever, all of that stuff, the burning stuff. And that's forced to break out through here on XLE, the energies ETF, and through the top there. So we're long on that. We got long on the breakout. I don't know how far we can get up on this, but let's aim maybe just for that order block and the sort of swing highs up at around about 98. We're currently trading at 88. So we could get a good 10 or 12% profit on this trade if it moves up sharply. So that's XLE. So the energy plays that we have on long on natural gas, short on long on natural gas, long on WTI oil, looking to reverse that, and long on XLE over here. I'm going to skim across the other charts very quickly. I'm not going to spend time on these, just to indicate what trades we have on. I'm short on the dollar yen. I'm not going to go into the analyses on these too quickly, too much, just very quickly looking for that sort of pattern to occur. Dollar yen, pause that, have a look at it. And then the euro yen is the other trade. Generally, I like the yen trades, the yen crosses short. We're short on that one too. And the whole hypothesis for all of these yen trade plays is the JXY, or the Japanese yen index. And you may not have seen this chart before. You can get this index. It's JPYX or JYX or JPX, various names for these. But very, very simple proposition. The Japanese yen's been weak for almost a decade now, and it's time for it to recover a little bit. The chart's indicating that we may be bouncing out of here, and so we're moving up. This is the Japanese yen index. If that moves up, we'll see the other charts move down, and that's the dollar yen and the euro yen, the ones that we're short on. So that's the sort of result of the JXY moving up on the dollar yen, and this will be the sort of result of the JXY moving up on the euro yen and move down into lower levels from where we are currently trading. And that's all because I think that not just because of the charts telling us this, but the yen is going to probably gain some strength over coming weeks, months, and even possibly years. So that's the JPYX. And folks, I think that's it. Let's go back to the crypto chart. Nothing else is moving, so there's not much else to look at. But before I do that, I'm going to get into the Streamlabs chat and see if there's anything that I can help you with. And if not, enjoy your wonderful Labor Day Sunday evening. There are no trades. There's no trading in the US tomorrow, but there is Forex trading going on tomorrow. And the European markets are open. And I will be trading live at Ola Prime, HOLA Prime, PRIME, TV tomorrow. You can get me there on the Forex Fire stream. So let me just say hello. Good day, Nachlopsky. Nice to see you. Oh, you popped in last week too. Nice to see you, MD, as always. Martin, good with the sounds. Larry, nice to see you. Emil and David. Always nice to see you, David. And Friedolf says, yo. Hello, Fatima. Thanks for your comments. Nice to see you too. So it's not a retirement plan, Martin. It's more of a go slow. I said to my wife, it's like there's a term that people use these days, or used to, I suppose, in the 90s and 2000s. The world has changed since COVID, but it used to be called quiet quitting. And you sort of pitch up at work, but you don't do very much, do as little as possible. I'm not quiet quitting and I'm not quitting, but I'm going on a little bit of a slowdown. But I will replace myself with more competent and more interesting people here on the channel. And more interesting is good for trading. Good day, Cleopas and Kogi, Omkar. Gigawatt, nice to see you, mate. Do you intend, or would you, if you were not in the gold trade already, buy on the breakout? Yes, I would, Gigawatt. Good question. Excellent question. Thank you for asking. I appreciate that. Gigawatt's question is, on gold, if we do, per chance, get a breakout, which we probably will, how would you trade this if you're not in gold at the moment? Well, it looks like paths B and C are no longer on the cards because, well, this is an ascending triangle. There's a 65% chance this will break out through the top just by nature of the pattern. But we are trying to actually do it now, break through the top after so long. So yeah, we probably will break out. And what I would suggest, Gigawatt, don't rush in on the breakout. But you don't want to move. So here's the thing. Don't let FOMO get you trapped or entered into a trade prematurely. There are better ways of trading these breakouts than just rushing in willy-nilly. Let's get this positioned. And what I'd like you to think about doing if we do break out, notice that we've got this rising trend line underneath us. This is really important. So let's draw this, and you can put this in your trading plan if you want to, and probably do quite well from it. So I've redrawn that black line. I'm going to quickly spend a little bit of time on this. This black line running up the center here is a trend line connecting the lows from December to where we are currently. We've broken down through that black trend line. We're in this rising ascending triangle, but we're under the trend line. We're still actually under the trend line, which means we're not in the uptrend. We're not in a downtrend, but we're not in the uptrend, if you know what I mean. So what happens when we break out of these patterns is that we'll move up quite rapidly, and we want to know more or less where we will get to before a bit of a pullback in order to get into the trade. We want to trade the pullback, not the exit. We want to trade the return, the kiss goodbye, something like that. So we want to trade it like that, but we don't want to miss out on the trade. So a very good way of determining where this point is, I'm going to put a blob there to emphasize it. The sort of best way of determining where that blob is and where you might get the chance to, where it'll turn around, in other words, and come back to give you an entry. So where will that blob be? Will it be higher up or lower down, or where I've put it? It'll probably be where I've put it, because it's not only the underside of the trend line. In other words, we will not have broken out, even though we've broken out of the rising ascending triangle. We're still under the trend line, and we'll probably reject from the trend line, coming back down to the breakout point, maybe slightly below. Allow for that. It often does that. So back into the triangle, annoyingly, as always, and then a bounce out of there, and eventually a break above that trend line. Notice also that if I draw a line across the page, a horizontal line at that previous all-time high on gold, it coincides, and I'll make it red, it coincides precisely with the blob that I drew in a short while ago. And so that is all absolutely perfect. And what I will be doing is waiting for this pattern to occur. And I'm going to look at my size shortly on my gold trade, and then probably add some more if I see a reversal out of this zone on the 4-hour or even the 1-hour chart in this case. So that's the way I would play this gold breakout if we get it. I'm not saying we're going to get it, but I think it's very, very likely. And I don't want you to be rushing in and buying when we hit the trend line and going, whoa, this is rushing up. It's moving up without me. I'm going to be left behind. And you hit the bid right there in the blob, only to get stopped out when the trade comes back inside the triangle and then bounces out. Having stopped you out, you missed the original one. You got stopped out on the on your attempt, and then you probably miss the trade that when it eventually gets going. In any case, because you'll be riddled with fear, having lost the first trade that you took, and the fact that you lost the first trade will dissuade you from taking the correct trade. So be very, very careful of that. And this is not an unusual dilemma. It is normal. That's what I meant. Not an unusual dilemma for people to find themselves in on these breakouts. I hope that helped, Jigger. And don't go blowing your Olive Prime account that you won by trading that breakout on gold incorrectly. And well done for winning that challenge account, by the way. Hi, Somnath. Have a nice week as well. You too. Hey, James, okay, we talked about gold. Ola, yeah, HOLA, Vikash, Ola Prime, HOLA Prime TV on here on YouTube. And I will see you tomorrow morning for the Forex Fire session. So join me there. I'll be doing some live day trading, which you don't often see me doing. It's not something I do much of. So yeah. DAX. Let's have a look at some of the questions. Have we seen the lowest price on natural gas this year? I don't know, Somnath. It's not possible for me to tell you the answer to that, or anyone else for that matter. My thoughts on DAX. Let's have a look. The Zetra DAX. Yeah, so by the way, we haven't talked about stocks, folks. I've hedged, as you can see, these orange arrows on my charts. I put them there for your benefit, not for mine. The orange arrows are hedges, and the green arrows are buys. The orange arrows are hedges. And if you see a red arrow, that means I closed the trade for a loss. As you can see, we've been long. I'm now fully hedged on the NASDAQ. In other words, locked in the profit there. I don't know what's going to happen next, to be honest. There's argument for both ways, really, up and down. There's argument for dramatic higher highs and so on. But I think we'll get guided by this S&P chart. There's also obviously concern that we're going to have a major collapse. We've run out of momentum. That's the one problem. We've moved up beautifully. We had the Zweig Brett thrust out of that tariff sell-off. It was difficult to get long or short after that, really. We've been long now. There's our green arrow at the bottom, and there's our hedge. So we've locked in quite a bit of profit. But look at this chart. It's curling over. It's running out of gas, running out of steam. Look at the volume at the bottom here. Volume dropping off horribly. Sling up a slow stochastic or a 14-period RSI on your chart. You'll see those are showing divergence. So none of this looks great. It can all be remedied, however, by a sudden surge up through the trend line that we're trading underneath. It's actually the original channel. This old channel that we were trading within, we broke down below it, and we're trying to get back into the channel. Above us, we've got all sorts of stuff. We've got the megaphone top, potential megaphone. We've got the 200-period Bollinger Band, the skinny red line, and we've got various Fibonacci projections up above us in this blue sky space. So in order to fix all of this flagging momentum, slowing down stochastic and RSI, and the chart just looking toppish, it's pretty easy to fix it. All we need is one big day candle to smash up through that trend line, up into the top Bollinger Band, and up towards my blob, all the way up at the top here. That's my target for the S&P. Although I'm hedged now, although I'm now hedged, I will get long again on the market opening. I'm just trying to move my blob away from the space here because we've got to move it along. So it's probably going to be all the way up here somewhere. But I will get long again and unhedged, but we've got that profit locked in. My target's all the way up here. So in order to fix this sort of slowing down momentum, it really just takes one day. And remembering that this month coming in September starts in a few hours' time, we've got the FOMC meeting and the interest rates announcement. A couple of things could happen. Three things, really. We get no rate cuts and Jerome Powell. Okay, let's forget about the meeting afterwards. Let's talk about the actual number. Three things could happen. No rate cuts, 25 points, 50 points. Which one is most likely? I think you can get rid of the no rate cuts. Unlikely. You can probably get rid of the 50. Unlikely, but possible. and that leaves us with a 25 basis point cut, the most likely outcome, which might be, and depending on what Jerome Powell says in the meeting afterwards and how he responds to the press, if that's all very dovish, along with a 25-point cut, that could be the time when this market really rips up through these levels. Prior to that, however, there could be some consternation which will cause this market just to falter for the next couple of weeks into the FOMC meeting, find a base, maybe at the 200-day moving average down here. It's quite a long way down, not that far down really, and the breakout point, and then dribble down there and eventually find a base. And then with the FOMC and Jerome Powell being all friendly and kind and nice about Donald Trump and interest rates, we could see a big surge. But I don't know. I think a lot of it's going to depend on that and the tone that is set during that period. And we've got some time to wait before that. Before all that happens, perhaps we're just going to have to go sideways to dribble down territory overall. Now, the question was actually nothing to do with the S&P and the NASDAQ. It was about the German 30. Where are we going? Well, we've had that periscope move a few days ago, a week ago, and then we've moved sideways since then. I've had these lines drawn on my chart for ages now, and I said, if we broke out through this flat top, let's make this thicker. If we broke out through that flat top, there would be an opportunity to perhaps go long. Well, we've broken out and we did it decisively. I didn't get long because we have, well, perhaps I should have got long. There are all sorts of other things to pay attention to, but here's the deal, right? This is pretty simple. We broke out with a periscope daily candle. We came back to the breakout point, bounced off it, and we're holding strong. Pretty typical. And it's exactly what I was saying on the previous charts about the breakout to the pullback and then the rally. And that's the sort of thing we could see on the US 30. My feeling is that when the market opens up next week, I would allow for a rinse and repeat of the same thing, I think. And I think it's probably likely that we'll retest that level, maybe get down to the 20-period moving average just to scare a few people out, possibly down to that order level, bouncy level, something like that, but somewhere into here, maybe just to the top here, but probably a little bit deeper and then up again. So that's how I'd play the German 30. But maybe if we just get back down to this black line, and that's at 45,100, if we get back down to that line, you might try, half of your entry position, allowing for a dip further down to add the other half. Excuse me. And if we don't get the dip down to add the other half, you could then add the second half on the confirmed bounce, or even on a move above these previous all-time highs just a few days ago. So that's the Xetra DAX. Probably a good trade, that actually. I kind of like that. So I may look at that myself tomorrow. All right, Marcin, you say you missed unhedging your natural gas position. Do I think it will go down a bit before the winter season? Marcin, I really don't know, mate. I don't think it's going to go up. I don't think it's going to go down. I don't think it's going to go sideways. I don't think anything. I really don't know. I don't make predictions on natural gas. It's almost impossible. And I trade the charts. So I don't know. I think unlikely. I'm bullish on natural gas. I think we're going to $5. If you are unhedged, or if you feel that you should be hedged and you're not hedged, you should do that right away. Just hedge it right now. And you can adjust. This is the benefit of hedging, right? You can hedge it right now and adjust your hedge later on. It buys you time. The moment you hedge that trade, your risk is locked in, whatever risk level. And I'm assuming that you're feeling a little panicky right now. Let's say you've got a 20% drawdown currently, and your position is unhedged and it's moving against you. It may move against you further at the open. All right. You don't want to be holding that bag, and you don't want to be holding that loss, and you don't want to blow your account. That's for sure. The only thing you ever have to do is to protect risk, to save your account. That's the only thing that is absolutely vital in trading. So I would hedge the whole lot and then sit back, have a rest. That'll be tonight in a few hours' time. I'm assuming that you're in Europe, maybe. So it'll be around midnight your time. Wait for the markets to open in a few hours' time from now. You're short. It's moving up. Hit the bid. Hedge your position. and go to bed, and then come back the next morning, decide what to do. It'll help you get some sleep, and it'll help you be in peace of mind. But don't hold on to that and hope it'll come back in your favor. I don't know if it's going up or down, but my own feeling is that we're probably more likely to go up than down. And once you've hedged your position, you can fix it later. You've locked in, you've got no further risk that's approaching you. There's no further possibility of you getting worse into the hole. And there's no chance that you're going to blow your account as long as you're, unless you're terribly overdrawn. So that's the best approach. I would do that. Hedge it immediately the moment the market opens. Go to bed. Wake up in the morning. It's possible as well that your mind is in a bit of a tumultuous state, that you're scared, afraid, panicky. You don't know what to say to your wife. I'm joking. You know what I mean? So it's possible that you're in that state, right? And trading is all about the mind more than anything else. If you're in that mind state, you've got a terrible loss hanging over you. I'm not saying this is your situation. It's just a good teaching opportunity. But if you're in a terrible situation, you're 20, 30, 50% drawn down, market's moving against you, you're unhedged, you think you're short, but it keeps moving up. The only thing and the best thing you can do is just to hedge that position and lock it in, lock that loss in, and you know that there are no further gremlins approaching you. Get that turmoil out of your mind and get yourself to a base level of psyche where you feel normal again, where you don't feel panicky, where you don't feel scared, afraid. You're not worrying about how to pay the mortgage or if you lose all your trading money, how are you going to tell your family? How are you going to pay the school fees? Get all of that out of your mind by hedging the trade, locking in your risk and stepping back, taking a pause, get the heart rate down, get the mind, do some Zen stuff, go for a walk, go for a surf, and then come back and reevaluate your situation. I promise you, that's the secret to many traders' faults and failures, and it'll help you a lot. All right. Wise old James. All right, folks. Right now, I'm fully hedged, Martin says. I wanted to get rid of the shorts. Okay. Well, anyway, I suppose all of that advice was good for someone. Anyway, Martin, so you are hedged. You want to get rid of the shorts. Okay. So this is another thing you can learn to do when so it's a good thing that you're hedged, by the way. Another thing you can learn to do when you're hedged in a position, let me try and find a chart. This one. So let's say, for example, you have I'm not going to mess up my charts too much, but try and imagine it. I don't want to move my arrows around in case I forget where they were. But just imagine you were short from this orange arrow down here where my mouse cursor is, and you got hedged over here, and it's moving up, but you're dragging that short position behind you. That's the question you're asking. So you're long somewhere here, but you're dragging a short hedge behind you that's preventing you from making more money. A couple of things you can do. Leave the hedge on and add some longs as you feel comfortable at the time and place that you choose. Leave the hedge as it is. Don't touch it. Add the longs so that you start balancing your account over into the long direction. That's the easiest way to do it because you don't have to take any losses. The slightly more tough, but ultimately the same end result is start taking some of the hedge off incrementally. So if you move up 10% in price, take 10% off on your hedge. For example, this is not the right numbers. These are just silly numbers. Or if you move up 20%, you take off 20% of your hedge and so on. So take your hedge off gradually, thereby reducing the impact psychologically of a large loss on the hedge, even though you've got a long position on it at the same time. So incremental addition to your long side or incremental reduction of your short hedge over a period of time, a few days maybe. And the third alternative is just close your hedge for a loss. All of them ultimately end up in the same, with the same result. Actually, the best answer is to close your short hedge immediately if you think it's going up. But of course, you don't know it's going up. And so your thinking is, what if it comes back down and I can get out of the hedge at break even, or even maybe that's the correct direction. So these are really difficult decisions. And a lot of it's affected by the distance between your position and the hedge, how much you stand to lose, and your overall sizing in comparison to your account. And if it's leveraged and highly leveraged, those are sort of decisions that you don't really want to make. So it's easier to incrementally add to your winning trade or incrementally reduce the short side of your hedge as you go along. That's the way I do it in any case. And it works for me because I'm also equally as susceptible to mental fatigue and psychological stress when I lose trades like every other trader. I'm not unique. I'm not a cold-hearted, cold person with no emotions. I experience the same as every other human. And so sometimes I've got to manage not only the trade position, but how I manage the trade position also affects my psychology. So taking big losses is not really my style. I prefer to hedge and gradually get out of those hedges. If I feel that the market's moving one way or the other, I start to swing rather than viewing a trade as a discrete position. I've got a long side to each trade, not always, not always at all, but sometimes I've got a long side to my trade and I've got a short side to my trade. I've got some long and some short, and the balance between those two is how I manage the hedge. And as we start moving in the long direction, I try to balance the hedge long. If we start moving down, I'll start to reduce the long side and increase the short side. I want to go through some of these coins I've got on, and just to indicate, I will be going through this in the private group later on this week in much more detail. But I've got it just to indicate, I've got a $23,000 account here, and I'm going to read out the size of my coins out of that $23,000. And let's go through it very quickly. This will be helpful for those of you who are trading in this altcoin season. Not everyone trades crypto or altcoins, but a lot of people do. So let me read through them very quickly. And starting at the top, Ethereum, I'm going to read out the actual numbers so you can calculate the percentages yourself. Write this down if you want to. If you're an altcoin trader, you might find this useful. So out of $23,000, these are the allocations. Ethereum, 6.5. Bitcoin, 5.5. Solana, 4,000. XRP, 2.5. Sui, 1.5. Toncoin, that's the coin for Telegram, which I think could be a good one. They've got billions of subscribers, billions, or at least hundreds of millions. And they have details for all of those people. Toncoin, I've got $1,000 on that. Cardano, I've got $500. That's the ADA coin. BNB, which is the one, not Binance. What is that exchange? Anyway, beginning with B, I can't be bothered to even look it up. I've got $500 on that. Drift Protocol, and the acronym for that is just Drift. $300. Ray, 250. Polkadot, 250. Curve, 200. Pepe coin, $40. Aerodrome Finance, that's Aero, $40. BitTensor, TAO, $30. And then a few other, I don't even know what these are. Mocha Network, MOCA, $10. Aikido, AKA, $10. And Babylon, BABY, $10. So that's my altcoin bag, and that will change over time as we move into the next few weeks. And if you'd like to know what altcoins I'm trading, I'm aiming to double or triple this 25 grand. It's a flutter account. What I mean by that is a gamble, a bit of a gamble account. There's not real trading. I'm doing this for those altcoin traders this season. And we'll be doing that live in our own trading room and also tomorrow at Ola Prime TV. All right, folks, have a great day. Binance, and thank you. Thank you. Binance. It is Binance. Yes, you're right. So you're quite right. It is Binance. Still long UEC is Peter Lee's question. No, I don't have no positions on UEC. I'm looking to buy dips on UEC and URA. So we have no positions on at the moment. They're a bit overbought. Peter says, still long on UEC. Well done. You probably got a bit more out of that move than I did, Peter. So good on you. And also have Cameco and Energy Fuels. Excellent. Yeah, it's all about energy. So folks, it's about energy, gold, AI, and crypto over the next number of weeks. So it's going to be exhausting and it's going to be fun and chances to make some money if you're a crypto trader. This is my first altcoin season. I've been trading Bitcoin, Solana, Ethereum, and XRP for a long time, but I've never traded the altcoins really. So this is the first time I've ventured into it. And I'm dipping my toes. It's not a lot of money, but let's see what we can get. Maybe I can turn 25 grand into 50 grand, maybe 75, who knows? But I'm prepared to lose all of that 25. Don't take this as trading advice. It's gambling advice, not trading advice. Yeah, so Scott, I'm going live tomorrow morning. Go and check it out, Ola Prime TV. You'll see it on there. It's already scheduled. I don't know what time. Well, I do know what time. I don't know what time it is in the US though. It's prior to my normal morning show at Ola Prime TV. I do the morning show, the opening bell, and the show leading up into the opening bell, which is just before the New York session opens, is the Forex Fire session, and that's where I'll be trading. So I'll see you there tomorrow. Hopefully. Scott, make sure you're there, mate. And everyone else too. Folks, have a wonderful Sunday evening. And if you want to know what trades I'm taking every day, come and join me in the private group. It's not expensive, or at least follow me on X, on Twitter. And I post up several trades a day too. Right. I'm just trying to think of anything else that I may have missed out. I think I've covered basically everything. Oh, yeah. Last little comment. Someone asked me this morning, actually, on the VIX, what's going on VIX, and I'm still in this thinking on the VIX. So we haven't got into the green buy zone yet. The last time we got there was in December, so 7 months ago. We haven't got back in there yet. I'd like us to get back into the green zone in order to buy. That would be towards the end of the year, and that would make sense as the VIX dribbles down and we see the everything rally, hopefully continuing, including all the stock indices, gold, well, all the metals, all the cryptos, energies, and stocks, the whole lot, and currencies against the dollar. So I think this is the most likely scenario. However, looking at what happened on Friday, a bit of a tick up, still below the 20-day moving average. I think the most important average here is actually the sort of, these moving averages don't make a lot of sense anyway. So let's just forget about what I was going to say. I think this is the most likely scenario. Towards the end of the year, I think we could see an opportunity to buy the VIX. Let's wait for the green block to get approached and traded within, and then we can take that. And at the same time, during this process for the next few months, the stock market should move up, as I indicated earlier, into those levels. And then towards the end of the year, perhaps, for example, the S&P will have hit its Bollinger Band and that extension zone, and then started to retrace, and then the VIX will have a chance to move up. All right, folks, have a great day. Hope you enjoyed the stream. Please like and subscribe if you're here, and give us a thumbs up for everyone that's been here on a Sunday night on Labor Day weekend. Take care. I'll speak to you soon.